Have you ever been stuck with overdue taxes?
Well, tax season has officially begun.
130 million individual tax return filers.
Unpaid bills to the IRS?
After the tax deadline for so many of us.
And that scary feeling like you're in trouble? Well, you're not alone, team. Today we're gonna help you find a way out of this tax mess. So make sure you stick around to the end of the video.
As early as you can. The bad guys just sort of pluck this stuff easy. And the IRS commissioner believes
IRS agents.
The IRS.
What's up, team? Welcome back to another episode of the Tax Huddle, where I'll be sharing some financial winning plays to help you be Uncle Sam on the financial field. Now, in today's episode, we're going to be tackling a common problem Americans face, and that is when you haven't filed your taxes, you start to owe money, and you become worried about the IRS coming in with that extra charge, a situation that most taxpayers have to deal with. So let's break it down in plain terms. So huddle up and let's break it down. But before we break the huddle, make sure you hit that like button, subscribe to the channel, comment below, and most importantly, pass this video on to your friends, family, and anyone you know who's looking to level up their financial game in 2024.
More bad news for the American economy.
Shut down, that would affect IRS work.
So what is going on here?
All right, team, let's talk about a situation we all know too well. Every year when January rolls around or February rolls around, it's time to gather our tax documents and begin to file our tax returns before the deadline. But then life happens, right? Things start to pop up. Sometimes you might need an extension, and that's okay. But what happens when you can't meet that extended deadline? Your return can become late, and then it becomes unfiled. Then the next tax season comes along, right? And you still haven't filed your last year's tax return. You might feel overwhelmed, like fearing that the IRS is looking for you. They're about to come call you, or they're gonna show up to your house, right? And then you think you need last year's data. So here's the deal. If you let the fear take over, this problem can snowball year after year. And eventually, the IRS might decide to actually take action. But I'm here to help you avoid that nightmare. I've got a roadmap to help you find peace of mind by getting back on track with the IRS. If you have late, unfiled tax returns, this is an urgent problem that needs your attention immediately. So here are possible consequences that can happen. Number one is the IRS might actually step in and prepare the return for you. And they almost always overestimate your taxes that you owe by a lot. Number two is there's even the risk of criminal prosecution. Although that's rare, it tends to happen in extreme cases, sometimes involving celebrities or public figures like Wesley Snipes. The best way to stay clear from the criminal prosecutions is to come forward and voluntarily file those overdue tax returns. So here's the good news. The IRS has a policy. In general, they won't go after those who come forward and actually file their past due tax returns. So taking that first step is crucial in resolving your issue. So let's transition a little bit. When you've got a long-standing tax problem with the IRS, they tend to cut you some slack. Typically, they require you to get your act together for the most recent 6 years of tax returns to be considered in current compliance with your filings. So let's break this down with an example. Meet Zach, who hasn't filed his individual tax returns since way back in 2018. Now, according to the 6-year rule, and because the deadline for the 2023 tax return has passed, Zach can start by filing his 2018 to 2023 tax return. But hold on, there is a twist. The IRS might occasionally ask you, or in this case Zach, to file tax returns beyond the 6-year period. However, this isn't something that happens every day. It requires approval from an IRS manager. Now keep in mind that this 6-year policy is an IRS policy, not actual law. So here's a crucial point. Once you file a tax return, a general 3-year statute of limitations on assessment of that tax begins to run. In simple terms, it means the clock starts ticking for the IRS to figure out how much taxes you owe. But if you don't file a tax return, it means the IRS can take their time and charge you taxes for that year without any deadline. So let me illustrate this with another example. Say hello to Sharon, who didn't file her 1967 tax return. According to the law, the IRS can still collect those taxes for 1967, but there's actually some things you have to consider. In certain situations, it might actually make sense or be in your favor to file a return beyond the 6-year requirement that the IRS has, even if you aren't legally required to do so. Let's take Nick, for instance. Nick kept filing his tax return for the year 2017. The IRS eventually decided that they were going to step in and do the 2017 return for Nick, showing a whopping $20,000 in taxes due, not to mention thousands in interest and penalties. However, if Nick would have just filed his original 2017 return, it would have showed only $4,000 in actual taxes that were due. By filing that return, Nick could have saved a whopping $16,000 on his tax bill and significantly reduces penalties and interest by 80%. So the key takeaway here is, while the IRS has its own policies and guidelines, it's essential to understand how they work and how they can impact your situation. Sometimes filing those overdue returns beyond the 6-year requirement can be in your favor, just like it did with Nick. Now let's talk about a scenario that business owners need to pay close attention to: unfiled payroll tax returns. Now if your business has these delinquent payroll tax returns but has been diligent about making all the requirement tax deposits and those returns show no taxes owed, you're in the clear to go ahead and file them without much worry. However, if you've fallen behind on making some or none of the requirement tax deposits and your payroll tax return reveals that you owe the IRS money, you need to tread carefully when it comes to filing, especially if your business operates as a limited liability company or a corporation. The good news is that you're not personally liable for those payroll tax balances. It's your business's entity that's on the hook. But here's the twist. The IRS has the authority to potentially transfer the liability for the trust fund portion of the payroll taxes to you. You can be held responsible as the person who allowed the business entity to neglect paying the IRS. Now you might be wondering, what exactly are these trust fund taxes? Well, they're like the taxes that you collect on behalf of your employees and send to the IRS. This includes employee federal income tax withholdings, and they're half of the FICA taxes. Now, if you find yourself dealing with unpaid trust fund taxes, it's in your best interest to prioritize paying off these trust fund portions first. Now, how do you go about it? You simply send a designated payment specifically to cover the trust fund taxes. The good news is that the IRS recognizes and honors such designations. However, here's a crucial tip. If you don't designate the payment, the IRS would apply it to a non-trust fund taxes first. If you're a business owner facing this situation, make sure to address those trust fund taxes promptly and correctly. It's a crucial step to get your payroll tax issues back on track and avoid further complications. Now let's talk about a crucial matter: foreign sourced income and foreign assets. The IRS has been cracking down on international tax compliance, thanks to the tools like Foreign Account Tax Compliance Act, or FATCA. They're now receiving information from foreign financial institutions about U.S. taxpayers. So if you have any foreign assets like bank or security accounts, or you earn income from overseas sources, and you haven't filed your U.S. tax returns or FBARs, foreign bank account reports, don't just send your returns by mail. Chances are you'll need to use a specialized IRS compliance program for this. In this situation, it's crucial to seek professional help from a tax attorney or specialist in international tax compliance. Making a mistake could lead to some big penalties or even criminal charges. So when it comes to foreign assets and income, tread carefully and get expert guidance to navigate this complex area and stay on the right side of the IRS. All right, team. Now, once you file those overdue tax returns, you likely want to relax and take a break, knowing that you just completed the first step to resolve the issue. Number one, the IRS will send you notices for each processed return. Make sure you ensure that they match what you filed. If not, and you disagree with the changes, reach out to the IRS via the phone number that's attached to that notice. Number two, if any of your late returns indicate a balance owed, be prepared for some penalties and interest for 1 or more years. So make sure you go check to see if you qualify for first-time abatement for the earliest year you filed. Number three, if you find yourself owing money to the IRS for individual tax returns, explore different options and try some deals that the IRS actually accepts. This will actually help you manage it more smoothly, knowing the fact that the IRS matters are rarely trouble-free. Number four, if you're filing returns more than 3 years past their due dates and the return reveals refunds owed to you, keep in mind that you might be filing after the statute of limitations for refunds. If that's the case, the IRS will redirect your refund to the U.S. Treasury, and sadly, you ain't getting that money back. So make sure you're prepared for these post-filing steps. And if you owe the IRS, consider exploring some different options to make the process a bit more manageable. All right, team. Now we've covered a lot in this video. So here's some key takeaways, because those unfiled tax returns can become a heavy burden. But you have the power to remove that weight by following the strategies that we've covered in this video. Now, first and foremost, take the initiative to voluntarily file your tax returns. Make sure you actually get with a tax professional who understands the intricacies of the tax laws and can make it a more cost efficient and less painful. The next thing here is to remember the special 6-year rule if you have unfiled tax returns that span between the last 6 years. You could qualify for some good treatment from the IRS, provided you actually decide to voluntarily file those taxes before the IRS catches up with you. The third thing to remember is if you're dealing with back payroll taxes or returns, it's important that you address those promptly. Even if you can't cover the full amount that's owed, designate your payment to address those trust fund portions first. And the fourth thing to remember here is if you have unpaid, unfiled, or unreported foreign bank accounts and assets, this can be a very complex tax problem, and it can even lead to some potential criminal issues. In this case, I highly recommend that you talk with a lawyer or professional to resolve that issue as soon as possible. All right, team. So the bottom line is, take the proactive step to address your tax problems, and it will save you a lot of money. Play on the offensive side. When you're on the defensive side and you're waiting for the IRS to come initiate the action with you, that could lead to some losses, some penalties, and a lot of stress. So take that opportunity, talk with a professional, and get your taxes done. If you've enjoyed these tips and want to see some more financial winning plays, please take a moment to hit that like button, subscribe to the Tax Huddle, and pass this video on to your friends, family, and fellow financial players. Until our next huddle, I'm your coach, Ibrahim Mohammed. Take care.